Analysts expect Singapore's key exports to see some volatility in the near term, even as trade expanded in January. That's mostly due to the seasonal impact of Chinese New Year holidays. Non-oil domestic exports grew 9.3% on year, extending their growth streak, though failing short of expectations. The electronics segment led the way, propped up by strong AI demand. Nasyrah Rohim with more.
Gold glittered as January's top non-electronic export. But its brilliance wasn't enough to offset declines in food preparations, petrochemicals, and specialized machinery, taking some shine off the overall outlook.
Non-monetary gold exports could still stay relatively elevated, helped by price effects. Pharmaceuticals, I think, may see some pullback due to the changes in the product mix. And I think a lot depends on the value add. So I think it will likely stay quite volatile. So I think the primary support for this year, I think, continue to be more on electronics rather than from other items.
Recent data shows that momentum for electronics shipments more than doubled last month due to strong AI-related demand. This is expected to continue well into 2026, with large global players like Google and Meta boosting investments in AI infrastructure.
Consensus analyst estimates expect that these tech firms collectively will increase capex by 59%. And that's being poured into AI infrastructure, data center expansions, servers and networking equipment, which will inevitably benefit Asian exporters, with Singapore being a major player in the supply chain.
Still, analysts warn that risks like a sudden pullback in global AI-related capital spending could trigger sharp corrections in global financial markets. It's why recent budget measures to support AI adoption and internationalization are seen as both timely and strategic.
I think what the government is trying to say is that while we are going to help you in the near term, we are scaling down the support. And that's because ultimately, Singapore market still has to be driven by competitiveness. So we are going to give you the opportunities to take your business to the next level and really tackle all the challenges that you're facing in the local market.
There's some need for diversification because number one, Singapore continues to be quite high cost. The economy also continues to shift in terms of the composition towards more higher value add advanced manufacturing and robotics. And I think these are also supplemented by the recent tax shifts, which is accelerating as well because companies are trying to compete in market share.
For the whole of 2026, authorities have upgraded key exports growth to between 2 and 4%.
Well, for more analysis, we're joined by independent economist Dr. Arup Raha. He's also visiting faculty at the Indian School of Business. Doctor, thanks for joining us. Now, strong performance in Singapore's electronics Nodex. Is this particularly growth aligned with the upgraded forecast from analysts, as we've just heard a minute ago, or is this just a temporary rise?
Firstly, good evening, and thanks for inviting me on your show. It's not a temporary rise because it's been there for quite a while now. You have seen very strong export growth, and a large part of it has been led by what is happening with electronics, which in turn is being led by what's happening with AI globally. The larger question is how long will it last? And there one can be a little bit, I guess, nervous because we have seen similar sort of episodes of you had the tech and we've had real estate, we have other sort of booms take place. And typically by definition, almost that we tend to overinvest, and that in turn has a bit of a letdown. You can see it somewhere in terms of policy that's being followed by the government, that there is a certain amount of caution that's out there. You're seeing it in terms of what was in the budget, where there were a fair amount of handouts given to governments, given to the citizens to be able to cushion them. Also, if you look around Singapore, you'll see there's a fair amount of construction work going on. So I don't think that the strong number that you've seen in terms of GDP growth, I think that's being taken for granted. I think there is a certain amount of caution that the future could be a bit more volatile.
Right. Now, you, of course, did mention the budget with the Budget 2026 placing a heavy emphasis on innovation and AI scaling. Should Singapore then rethink its export model, especially as non-electronic Nodex continues to shrink?
I don't think so. I think it serves Singapore well. I think the Singapore export model is not that it's particularly tied into a particular sector or a particular, it's that it's versatile. That's what it is. It is export oriented and it is versatile, and it puts in the necessary sort of infrastructure as well as the human resources to be able to do well. I think the Singapore model, while it needs to be nimble, I don't think there's any need for surgery. It's doing well enough.
So nimbleness is a key factor here. How do you think susceptible is Singapore to the ability to manage these tech cycle volatilities?
There are two issues here. If there is a fair amount of volatility in the tech sector, and I would expect that sometime about the second half of next year, you should start seeing that coming into play. It's been a while. You should. There's a cyclical element to it, which Singapore is susceptible to. It's not likely to be able to escape that, given its export orientation, and in particular, its exposure to the tech sector. That's part of the reason why you've had great growth for the last 2 years. It will also hit if the tech bubble bursts. But then there's a structural element to it, that if there is a slowdown, how strong are the balance sheets in the economy to be able to deal with the slowdown? And there Singapore, as always, is very well placed.
Right, certainly one of the richest countries in the world, being that fact. Now, of course, PM Wong did also, of course, being finance minister, also spoke about the push towards new markets in the Middle East, Latin America and Africa. Are these viable growth markets, you think?
Of course. It's not just Singapore. The world is looking at new markets right now. I mean, there's been a fair amount of turmoil in terms of external trade, especially emanating from U.S. trade policy. And I mean, you've seen quite recently that Canada has signed a deal with China. I think the world is looking at new markets. Singapore is doing nothing particularly different, and it's a wise thing to do. I mean, keep your eggs in as many baskets as possible. That keeps you somewhat shielded from what one economy does.
Thank you very much for those insights. That was independent economist Dr. Arup Raha. Thanks very much.